Today we focus on Tesla stock, the Fed's hikes, neutral, or declines in interest rates, and how that affects the whole market, especially growth stocks like Tesla. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like better ideas on investing and trading, we've had some stuff that might be helpful to you as we move into the busy period for Tesla. So this weekend, I have a group of sort of investor traders that are friends of mine, and there are kind of three things I wanted to look at today. Number one is something I call the screwometer. Number two, I also like to look at sort of global macro investing issues relative to how the Fed is moving and how that affects stock prices. And number three, I wanted to look at combining those two to kind of look forward for what to expect over the next, let's say, 2, 3, 4 weeks. So the first thing I wanted to review is we were just having a conversation about the fact that I'm seeing a bunch of traders. They're all starting to get in on Tesla, looking forward to the next ride from about 250 all the way to 300. And this brought up in my mind something I haven't talked about in a long time, but I call it the screwometer. So the way the screwometer works is that there's a way in which market makers or really seasoned traders, they can actually go in, take a stock and move it either up or down 5, 10, 15 points and hold that movement for multiple days until everybody in the trading sphere may panic, and then they just don't have the resources to permanently hold a stock. But for a short period, this can happen. One example that pops to mind is watch what happened over the last 2 or 3 weeks with NVIDIA. NVIDIA is a lot smaller, is not a lot, but it's a smaller company market cap than Tesla has been mostly until we got into this period recently. But you'll notice that in NVIDIA first, the stock popped up, heading towards 400, 415, and then it sunk back below 400 into the 380s, 390s. And it stayed there for a week or so, call it 4 or 5 business days. Well, what I believe happened there was the screwometer. They could see a large number of people had made money on the stock and on the options. And the folks who controls things decided they were going to institute the screwometer. And what is that? Well, real simple. All you have to do is, let's say, buy puts on a certain stock. In this case, we call it NVIDIA. If it's at 415, you then institute the process of forcing the stock price down, let's say to about 390, 385. So all those people making money on the way up, hand it back over on the way down. Once the dust is clear and everybody is now nervous about the stock continuing to fall, that's when you go on the other part of it, which is you release the hold on that stock. And now you have that stock starting to rise again naturally. And all the folks that instituted the screwing process, the stock is now organically rising to a number that it really should be at. So basically, you could watch this on NVIDIA where it went up to 400, then dropped back to 385, 389, and then it made the run all the way to 430, 435. And in my mind, it was somewhat restricted on its movement by the power of the market makers to control that stock via a number of techniques, including options. So I wanted to bring this up today because I have a bunch of friends who are in Tesla, and I was watching the action after people had gotten in and taken positions, more long-term, but over the next few weeks on Tesla on the positive. And I do think Tesla will rise, but I'm getting this really bad feeling about the fact that it just smells to me like the screwometer is in play. Now, my trading buddy, Sam, actually pointed out that yes, they can control and manipulate the stock price, but if there's heavy news that's moving Tesla's stock price, it's difficult to impossible for the large institutions to sort of force the game in the direction they want in the short term. And I'd have to say, yeah, I kind of agree with that. But the other thing about Tesla that's interesting is it's the number one options and traded stock on any of the exchanges. So it's a particular emphasis point for those who want to manipulate the stock price. So today, what I wanted to look at is I have something I call screwometrics. So one way to understand what this is if you go to the options chain for Tesla and look at the call options, and then the number of call options and what the trading activity was, but also you want to take a look at the put options as well and understand, well, what is the put call ratio for Tesla? If there are a ton of people that have bought calls and very few people who own puts at a variety of price point, the skew of everyone is towards the stock price rising. And the more severe this imbalance, in my mind, it's an opportunity for the large institutions to leverage that command to screw over a whole bunch of sort of lesser or smaller traders until they've sucked out the profit, and then they might just let it float as it should. So another sort of angle on this, and it was part of my title regarding oil and the Fed, is there is an economic principle called the prisoner's dilemma. So the way prices are set is by a process called the prisoner's dilemma on a lot of things. I wanted to today bring up the prisoner's dilemma because there was has been a discussion going on, which is what's going to happen to oil prices. Now, who cares? Well, the reason why you and we should care about oil prices is that oil prices represent 2% of all the costs for most companies. So what ends up happening is that if those oil prices in this case are above 100, the Fed is crazy worried about inflation and wants to raise interest rates. If those prices are 70 and dropping towards 60, the Fed is sitting there going, hey, inflation is looking pretty good because overall costs for producers are falling by the 2% component. And so therefore there's less pressure on price increases, et cetera. So the question is, where are oil prices going? And the Fed is obviously watching it as one of the variables that they're determining how they're going to handle interest rates. Well, the problem right now is probably 20% at least of the global oil market is the Russians selling $30 below current market price oil to key customers willing to deal with the sanctions. That's India, that's China, and a number of other small countries. Now, what does this do? Well, the assumption that you might have is, hey, Saudi Arabia and the others that are big producers don't have to worry about this because it's only a limited number of customers that's buying that oil. Well, Saudi Arabia actually announced that they're actually arbitraging that oil and actually creating products that they were selling on the market because they could get a hold of the Russian oil at a discount and therefore, buy it cheap, sell products off of that. And it allowed them to increase their throughput of products and at a market discount, a nice market discount at that. So the issue that pops up is that the more games people are playing in terms of leveraging that lower price, the more the marketplace starts to take the hit from that price. So in essence, the Saudis have talked about lowering production by 1 million barrels a day, for example. Good idea theoretically to help prices increase. The challenge though is that, when 20, maybe even 35% of the market is buying oil at a steep discount, it screws up the whole market. It's just that it's not blatantly obvious how it's working, but it is working to screw up the market for the Saudis, which lowers oil prices, which subsequently lowers inflation. And the Fed is watching this declining inflation and saying, hey, we don't have to do a lot more because we're getting this relief that we'd like to see. Now, clearly, there's the other side of this. When the initial war started and there was some disruption of oil and oil prices spiked over 100, that's the other side of the conversation. But I wanted to kind of do a show today really concentrating on trading activities that can occur and how this can bleed into the market and cause a lot of stocks to either rise or fall. And in this case, it's my belief, because of the prisoner's dilemma, I think that we could see a $50 oil price. And if that actually showed up, we could have the Fed not only neutralize on raising rates, there's a small chance that they're going to start reducing rates because they're not seeing the inflation pressure across all costs. Now, Elon Musk talked about this being the case, and in this case, we have to give him credit because he was looking at commodity prices the end of last year into this year and saw declining prices that he predicted. Therefore, the need for the Fed to go after this inflation challenge was mitigated. So I wanted to run this by you today because 6 weeks ago there was a discussion of, are we in deep trouble because the recession was about to come in? Now there are a whole bunch of people saying, uh-oh, we're not recession we're looking at heading into a boom. And I believe that the core logic behind this is the prisoner's dilemma on costs related to oil prices. So obviously, it's one of the many variables the Fed looks at, but I think it's one of the chief variables that's influencing what stock prices look like. So just wanted to encourage you to think through this, because a $50 oil price easily gives Tesla a $30 bump in price because they'll have higher profits. The rest of the market will rise in the process, and those higher earnings relative to costs are a good thing for all producers. So don't be surprised if we see some decent numbers coming out of the prisoner's dilemma related to the oil prices, and how the Fed reacts to that, I think, is a huge deal. At any rate, want to again thank you for joining us on our show today. Just a reminder on our health tips for today. Don't forget your 25 leg lifts a day on each leg, strengthening the quad muscles, reducing chances of knee issues. Also wanted to encourage you, no more than a salad prior to lovemaking, because blood flow will not be to your stomach. It'll be available for other extremities. The last recommendation I wanted to mention on a health basis is look up Dave Chappelle, and anything that pops up in the small vignettes of his show, try it out. I've been getting a good laugh on an every morning basis and wanted to encourage you to try it out as a way to lighten up your day in the process. At any rate, thanks once again for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, lehit road, Hebrew, choda hafez, draiziche, ni hao ma, hey do, namaste. And in Jamaica, we say enough respect, walk good man, arrivederci. Thanks for joining us. Have a great day. And let's get those lower oil prices going so we can move heavily into the growth zone that's a possibility with those lower prices.